Hello everyone, and thank you guys for tuning back into another video. As always, if you enjoy the content, make sure to leave a like and subscribe. But before I get into this video, I just want to say a big thank you to everyone that watches my videos, because we just reached over 200 subscribers, and that really means a lot to me. I only started doing this YouTube and actually recording my trades this year a couple months ago. So it's a pretty cool milestone, even though it's a small one. But once again, thank you guys for subscribing. So now back to the video. So little recap as to what happened from last video. We did make up our loss. Remember, like I said, I had a $400 loss last week, so we were able to make that loss and also a little bit more, and end up the week at 3,690, which is a new account high for this $100 challenge. And so I have a couple more videos that I need to make so that I get up to par, and you guys know all the trades that I took that got me to this new high. But before I do that, I need to go back one more week and kind of explain the trades that happened that week. So I'm gonna go ahead and start off by explaining a trade that I did on SPY. And we go down to the history. We're gonna see that on August 30th, I bought a 295 call. I ended up actually buying 15 at a price of $1.04, and then I ended up selling it the same day, August 30th, at $1.10. So from a this was a pretty quick trade. Like I said, I was just trying to get in and out really quickly. You see, I got in at 9:41, and then we ended up selling roughly around 20, 25, 30 minutes later. So as a day trade, it might have been a little bit longer than I usually hold, but overall still a pretty quick trade. Quick and easy, $90 on this one. So I'll go ahead and explain a little bit more when I get to the TD Ameritrade chart, but overall it was just a support and resistance type of trade. The next trade that I did was on GLD, which is a SPY gold ETF. And so because there's been a lot of market volatility, gold has been a really good stock to be able to, or a really good ETF to be able to trade. And so what I ended up doing was on September 3rd, I ended up entering a call credit spread, and what I did was I sold 34 GLD contracts at a price of 0.37, and then I ended up buying. So I received a total premium of $238, and I ended up selling the spread again 2 days later at 0.02. So overall, this was a $170 win. But overall, not much risk on this one, like I said, because there's been a lot of market tension. GLD has been going up, so that has allowed me to kind of set relatively close legs in the spread and still be able to profit, as you guys can see. But now I'm going to go ahead and hop over to the TD Ameritrade chart and show you guys a little bit more in detail as to why I took these trades. So this is the SPY chart, and what I ended up noticing on Friday the 30th was that at open it started to gap down pretty quickly, and it just continued selling off in the first hour or so of trading, and it was heading towards this 291 area. And I already knew, because I had been watching SPY, and SPY is an ETF that I watch every single day, but I already knew that 291 was a strong key point for SPY, because if we go back just one day prior, we can see that right after it broke that 291 area, it was able to gap up all the way up to around 293. So as I knew that coming down to that 291 area, it was going to be a very key price for SPY. If it broke down, it was going to be a good position to short, or if it held and it bounced off, it was going to be a really good place to buy some calls. So I already kind of knew what I was going to do. I was either going to buy calls or puts, depending on how the price of SPY reacted to around that 291 area. And you can see that it ended up bouncing off that 291 area, and so when I ended up seeing that bounce, that's when I entered my call positions. And so overall, you can't really see on this chart that well because it's the 20 days 1 hour, but like I said, because I'm a little bit behind on videos, I can't use I'm forced to use the longer time frames, because on the shorter time frames it only goes up to 10 days, and this was around a week and a half ago. But you can see that how it bounced off that 291, and off that 291 it went back to 293, so it was around a $2 move, which was a pretty good would have been a lot bigger gain if I would have held more, but I was just trying to get a quick profit and secure them because of how volatile the markets have been lately. You can see that it ended up bouncing and testing that 291 area once again, and it just bounced. However, later on, after market, it did cross under that, and you can see that pivotal key point of the 291 area, how it ended up gapping down once it was able to cross down that line. But overall, pretty easy trade, just trading support and resistance levels here. Nothing too technical on this one. So now I'm going to go ahead and hop over to the next trade. So this is the GLD chart, and what ended up catching my attention on this trade was that on September 3rd, the day where I entered the trade, it started gapping up. It gapped up quite a bit. You can see that on Friday it ended the day at around 143, and by Monday morning it had gapped up all the way up to 146.13. So that to me definitely indicated that it was getting way overbought. You can see the RSI levels were all the way up in the high 70s, and if we go back and look at an even longer time frame, we can see that over the past couple of months, gold has been trending upwards a lot, so it's been getting quite overbought, and that to me, it had been trading near its 52-week highs actually, so that to me indicated a good entry for a short-term short play, and I ended up entering that short play by entering a call credit spread. And if you go back right here, so what I basically ended up doing was I ended up selling the 148 calls. So what that basically means is that if GLD stayed below $148, I would make a profit, and that's exactly what ended up happening. You can see that after gapping up all the way to $146, kind of just traded sideways for the rest of the day, and it gapped down into the open just to have another pump and gap up to a new 52-week high of $146.82. However, this time it was not able to break over that 147 area, and so it kind of just traded sideways after it got rejected a couple of times. You see it tried going higher, but it wasn't able to, and so it just ended up downtrending. And you can see on Thursday the 5th, it had a pretty big red day. It opened up at around 145.60 area, and then it quickly gapped down within the first couple of hours of trading all the way down to 142. And so I was able to profit, like I said, $170 off this trade in only 2 days. So pretty good swing trade, if I do say so myself. And like I said, not too much risk, because if we look at it at a risk management point of view, because it was had been going up so much these past couple of months, and because the RSI was way oversold, or way overbought, I mean, this had a lot more potential for it to get rejected and have a gap down instead of for it to continue going higher. But that's pretty much it for these two trades. I hope you guys enjoyed the video, and I will see you guys in the next video.